Ladies and gentlemen, on behalf of the Board of the Electricity Authority, it's my pleasure to welcome you here this evening. My name is Brent Layton. Those of you who think I'm slightly thinner than I was last year are very observant. I am. And I'm not dying. I had an operation to replumb my stomach, and it's led to dramatic weight loss. And my only question now is, when's it going to end? Because I could, in fact, be a racing sardine very shortly, and then nobody will see me in the pool at all. But welcome along. And I'm joined here tonight by my board colleagues, Eleanor Trout, David Bull, Susan Patterson, and the Honourable Roger Sowry. Well, tonight I'm going to look back a bit on 2014 and then look forward on 2015. A year ago, as you will recall, we were in the midst of a debate about alternative models for the electricity market. Mighty River Power and Meridian Energy had been partially privatised, but their performances on the stock exchange were still in their infancy, and Genesis Energy was yet to be floated. We had, a year ago, 22 electricity brands and 14 electricity retailers, and the new companies on the block were Budgie and Grey Power Electricity as fresh brands. Energy demand was also stagnant, and the quarterly survey of domestic electricity prices put out by MBIE for 2013 had shown that the prices for residential consumers had increased by 3% over the calendar year before, but it was difficult to know exactly what that meant, as statistics didn't comprehensively take into account the full range of discounting we were observing in the market. And what's more, the quarterly survey measured prices that retailers offered to new customers and not the prices that consumers were actually paying. We now have more robust measures of electricity prices produced by MBIE. The new quarterly survey has shown that the electricity component of that, the energy component for households, has fallen in 2014 by 0.6%. Well, that's good news for consumers, but consumers, of course, are much more interested in what's happened overall, and as a result of rises in transmission and distribution charges, we had an increase in the year of 2.4%. 1 year on, from 2014, so stakeholder presentations, and the focus of the debate has shifted to questions about how the market is delivering value to consumers through innovation and new technology, and the efficiency of electric vehicles and household solar generation. The debate has also shifted back to issues about reliability due to events such as the Penrose outage of last year. First off, though, looking back at last year, our review highlights that very positive activity in the wholesale market with an increase in trading on ASX hedges and also in fixed price contracts. We introduced in 2013 a number of new futures products, and some of those, particularly the monthly contracts, have started to trade actively. The others are still waiting for their time, the quarterly and the options arrangements. And we'd obviously like to see more activity in that futures market and some other hedging products, particularly caps, and I'm aware there's interest from other parties in that being the case. I'd like to, in fact, acknowledge at this point the good work of generators who managed what was another dry summer using the spot and the hedge markets without too much difficulty in terms of the hydrological conditions overall. And interesting, hydro generation, in fact, in 2014, despite the climate conditions, actually exceeded the levels that it reached in 2013. The electricity demand picture in 2014 has been interesting. Started out relatively flat, but for the year as a whole, it ended up with 1.25% higher production than had happened in 2013. And it was in the last half of the year and towards the end of that last half of the year that demand really started to increase, and the final 6 months of the year demand was up 2.7% over what it had been the corresponding period in 2013. It's too early to say whether this growth in demand towards the end of the year of 2014 merely reflects one-off factors like the rebuild of Christchurch and the dry weather increasing irrigation use, or the extent to which it reflects factors that may have a more sustained effect, such as growth in GDP, higher population growth, or indeed the lower trend in prices that we've had. Our econometric modelling that we put out in 2014 confirmed that the close link between gross domestic product and prices and electricity demand remains in place, but whether the upturn in demand that happened towards the end of the year is going to be sustained and go into the future is something that time will tell. We saw the big four electricity retailers lose some market share in 2014, and the medium-sized retailer groups, the Trustpower, Nova and Pulse, gained collectively around 40,000 customers. And some of the smaller resellers also grew, although most of them are still very small, but their entry into the market brings further competition, often through new ways of serving customers. And no one knows how they will fare, of course, but neither do the large retailers know whether they have a future or not, and so they represent quite a significant amount of evidence about low barriers to entry. In the last 18 months, we've had 8 new retailers into the market. 4 of them, from what our discussions with them, look to be actively pursuing household consumers. The others seem to have other strategies and objectives in mind. But that brings, in fact, their addition to the market, the total number of retail brands to 27, which is quite a large number in a country of this size. Across the country, our estimates suggest that we should see an average change in residential prices for electricity for the year ended June 2015 that's 0 or negative. Of course, some regions will see prices rise, and some will see them fall due to changes in charges for local networks. But overall, we should observe 0 or negative price changes, as the distribution charges that are regulated by the Commerce Commission, which is not all of them, but it's most of the major ones, are set to decline on average by about 1.1%. So that's 2014. Let me turn my attention to 2015 and beyond. I'm sure you all know that the Electricity Authority was founded in a way that set its statutory objectives to have 3 distinct areas of focus: to promote competition, to ensure reliable supply, and to encourage the efficient operation of the electricity industry for the long-term benefit of consumers. And initially, we focused, not exclusively, but we had a real focus on reliability. And we think there's been good progress in this area. It now seems, to me at least, somewhat distant memory of the sort of 2001, 2003, 2006, 2008. We're about to have a hydrological crisis on our hands, and consumers need to do something about this. We haven't, despite some quite dry years, including recently, haven't had a repeat of that. We have to remain vigilant, and of course we will use the Security and Reliability Council to assist us in that area, but it does look like we have dealt with that hydrological issues and the fuel supply issues that were there. But of course we've been requested by the Minister of Energy and Resources to undertake an inquiry into the Penrose outage. So there is still issues around reliability that are going to crop up from time to time. In regard to that, we received good cooperation from Vector and Transpower in our review, and we will be seeking the Security and Reliability Council's wise advice on any issues we uncover and any judgments we might have to make. The Authority's clear focus in the last couple of years, after initially looking at reliability, has been on our program of work to improve competition, and particularly retail competition. The What's My Number campaign has been the flagship program for that in terms of public presentation, but it's been by no means the main one. Putting in place FDRs, developing hedge markets, putting in place the changes to the prudentials that will come in later next month, prudential security requirements, they've all been factors that have been aimed at making the market easier access by new entrants, stimulating competition by current participants, and making the market, the retail market, more competitive. And we will be continuing on in the next part of the retail data project over the next coming months, and our aim there is to ensure that consumers have good access to their own consumption patterns so that they can see which is the best tariff for them, given their own peculiarities of their consumption over the courses of a day and over the courses of a season. Having spent a couple of years focusing on competition, it seems logical that we now turn our attention to the third limb of the statutory objective. We're not giving up the other two. We still will have a little bit of work, maybe even more than a little bit of work in those areas, but we now think we need to really move on to efficient operation of the electricity industry, and to particular onto efficient pricing, including issues around whether the spot market is producing the right outcomes, or whether we could do something else, as the WAG has suggested to us, in terms of tweaking that. But one of the areas we will also be looking at is in relation to the efficient pricing of distribution. The number of small-scale solar installations, that's those with less than 10 kilowatt capacity, has jumped from around 1,900 in our registry in December 2013 to almost 4,500 in December 2014. In other words, there's been more than a doubling of the number of those small plants. And we're starting to see solar being marketed hard in New Zealand. It's important we don't, though, make the same mistakes as other jurisdictions, where perverse price signals, often driven by environmental objectives, and investment decisions in response to those price decisions are now creating longer-term issues. Our view is that the market should be neutral among technologies, not tilted one way or the other, but we do want to make sure that people are seeing the true economic costs of what their decisions are imposing. So we need to make sure that that is happening, and in that regard we were heartened to see that the Electricity Networks Association, the distributors' industry body, had also decided it too needed to look at the particular issue about distribution pricing and those consequences. And in addition to that ENA work, the authority is progressing a review of distribution pricing, focusing on issues like the signals given to distributed generators around electric vehicles, battery technology, and so forth. And we'll be bringing that out later in the year. And our work on reviewing the transmission pricing methodology is also progressing, and an options paper setting out 3 options for parties to consider will be released in a month or so's time to get feedback. The options paper is merely discussing what options we've got on the table. Of course, people will undoubtedly suggest other options out of the options. It's not the proposal. The proposal paper will come out later after we've had the chance to get that feedback from it. But we are progressing down to getting to discussing whole packages rather than just components, which our working papers have done to date, because we have listened to the industry, which was clearly signalled as they wanted to see a package rather than just the individual things like discussion of sunk cost, discussions of ACOT, discussions of the other components that we have put out over time of beneficiaries' pays and so forth. We've also been following up recommendations from the Wholesale Advisory Group to consider how the spot market's efficiency might be improved, and we have been considering various adjustments, such as basing settlement on real-time prices and introducing a period ahead market, and what we'll be doing is coming up with some consultation about that. And we think it's important that consumers start getting the opportunity to use the information that is available through their smart meters to make decisions, and so we'll be looking at how we progress that particular aspect, our retail database aspects as well. Consumers need to have that confidence that they are responding to prices in an appropriate way and what those are and what the implications are for them. Our retail advisory group is progressing in assessing the market impacts of the low fixed charge regulations, which is another area where efficiency has been questioned by some. We have the power under Section 16 of the Electricity Industry Act to do the review, but it falls to other parties to decide whether to review the regulations, because the regulations are not in our power, they are set by the Minister, and he of course will get advice from his ministry rather than us. But what we can look at is the efficiency, the reliability, and any competitive impacts that they may have. And then finally there's a development I'm quite interested in myself, in which I think there's a considerable potential in New Zealand, and that's electric vehicles, and that'll be part of the discussion paper that we're bringing out and the implications of that. In 2014, nearly 80% of New Zealand's electricity was produced by renewable sources, and since then we will have a full year of Te Mihi and a full year of Mill Creek coming on stream. So in sort of normal hydrological circumstances, what is normal, but we could expect it might be even slightly above 80% renewables. So that move to electric vehicles in the New Zealand context, where you are charging them from what is largely a renewable resource, has a significant prospects of reducing emissions overall. And in New Zealand, as most of you will know, spot electricity prices typically have a high variation from night to day and from weekdays to weekends. And in that circumstance, in the middle of the night, generally, but not always, electricity prices are quite low. In the middle of the day, they're quite high. So making nighttime charging of electric vehicles at relatively low cost to the economy and to consumers, if they have access, as some suppliers are now making it possible, to what those wholesale prices are, a very realistic prospect. So thank you for coming tonight and for contributing to a very successful, from our point of view, 2014. We look forward to working with you in 2015. So I hope you will join us in refreshments and for further conversation. As I pointed out, the other members of the board of the authority are here, as is the Chief Executive and the senior leadership team. And a number of us will be at the Downstream conference over the next 2 days, and hence easily available for you to express your views to us directly. So thank you very much for coming along this evening, and I hope you enjoy our refreshments.